oil marketing companies is one space that remains in focus given the fact that crude prices have again come down and the street is now anticipating again that whether there will be a fuel price cut or not. Now to understand this, let's look at the history of fuel price cut in the last 3 years. Now the first cut that we had seen was back in November 2021 when the government had reduced the excise duty on petrol and diesel by around 5 rupees and 10 rupees per litre. Then in May 2022, the prices were again reduced for petrol and diesel by reducing the excise duty by around 8 to 6 rupees. Then in March 2024, this was the first time when oil marketing companies had reduced the prices of petrol and diesel by around 2 rupees per litre. Now, if you know that the fact that the retail prices in India are deregulated, petrol prices were deregulated back in 2010 and diesel prices were deregulated in 2014. And from June 2017, as per the government notification, prices of petrol and diesel in India need to change on a daily basis based on the Brent crude prices. However, OMCs have refrained from changing the fuel prices based on the crude movement on a daily basis since March 2021. Now, there are a couple of reasons behind this. Firstly, it was the volatile crude prices, and oil marketing companies were saving the consumers from higher crude prices also at one point of time, because if you remember, when crude prices were at around $110 per barrel, oil marketing companies had never increased the prices and they were saving the consumers from this higher crude prices. So they were their financials were taking a hit at that point of time because of this high crude prices and lower petrol and diesel prices. So if you look at the comparison, back in May 2022 when crude was at $110 per barrel, petrol and diesel prices were anywhere between 90 to 97 rupees per litre, and oil marketing companies at that point of time were earning a loss of nearly 10 to 12 rupees on selling every litre of petrol and diesel. Now currently crude prices are at around $74 per barrel levels and petrol and diesel prices are between 88 to 95 rupees, and oil marketing companies are currently earning a margin of around 10 to 12 rupees per litre on sale of every litre of petrol and diesel. Now these margins are at a multi-quarter high, and hence there's a theory going on that oil marketing companies might have to go ahead now and cut fuel prices. Now in past also ahead of elections we have seen this, that the oil marketing companies have been cutting fuel prices, but another point of view here is the fact that again Brent crude has been very much volatile. In the past 2 months when Brent crude was at around $80 per barrel, within a span of 1 month we have seen prices falling back at lower levels of $70, and then again we have seen $80 level of crude prices, and currently they are at around $75 per barrel level. Now this volatile crude prices might refrain the government and the oil marketing companies from lowering retail fuel prices. However, analysts continue to believe that ahead of Diwali there might be a retail fuel price cut, and any cut more than 5 rupees per litre might have a significant negative impact on the financials of these oil marketing companies. Now if you look at the sensitivity analysis, every 0.5 rupees per litre cut when it comes to the fuel margins impacts IOCL, BPCL and HPCL's EBITDA by around 7 to 11%. The highest impact been on HPCL given the fact that retail fuel contribute the higher to their EBITDA level, and the lowest impact being on IOCL with around 7% impact on EBITDA with every 0.5 rupees per litre cut.